What is a tax strategy process? We're going to talk about it from top to bottom. We're going to talk about what a strategy really is and why you need it today. So the first thing we're going to talk about is the tax strategy process step by step. What does it take to get an actual process in your business and in your life? Number two, where the process breaks down for most business owners. And number three, how do you build a tax strategy process that works year round? So first, let's talk about what is a tax strategy process. By definition, tax strategy process is a year-round system. Remember system, so month by month by month, the planning, structuring, adjusting your financial position so you minimize legally what you owe in taxes. It's a very thoughtful process, and most of you have absolutely no plan, which is a plan, do nothing, and then you roll around, you hope you get a refund in January, and then you file your taxes in April. That has nothing to do with what I'm going to describe to you on how millionaires or people on their way to becoming a millionaire do a tax planning process. So step by step, what is the process? Now, first of all, where's your baseline? Where are you today? How many tax years have you already filed? I have clients that come in and they haven't filed the last 2 or 3 years, which means there's penalties and fees that are going to be associated. So first of all, where are you? Have you filed? Do you have any IRS issues? It's just a baseline of understanding where you are. Number two, we also through that do an entity review. Do you have any companies? Because companies make money, individuals get taxed. So if you have a company and you're a sole proprietor, we would say you have nothing. You have just you. It's all under your Social Security number. You have a personal account and a business account, and it's all you. So that doesn't count. And when we say living corporate life, that means in America, you have an LLC, a limited partnership, an S Corp or a C Corp. They're very strategically designed and contracted, bound together, not owned by each other, very strategically done to support the tax planning process. Then number three, which is looking at your deductions. I call it forecasting. So let's just say you set up 3 companies and there's you, based on the tax strategist's advice and insight to you, not yours. So in that, who's going to be the management company? Who's going to be the operating company? And maybe a third is an LLC that might own some real estate. But now you have 3 sources of corporate credits. You have 4 bank accounts, right? You have your personal bank account, which should make very little money, if anything. If you're employed, that's where your money goes and it stays there. There's nothing to do with it. And if you're employed and that's the only way you make money, you make it, you pay tax, and you live on what's left. That does not have to be how this works. Your company can make money, activates the greatest tax code, and then you live on what's left. So inside the tax plan, step by step, is which of these 3 companies pays for your vehicle, which one pays for your payroll, which one pays for your office, which one pays for your phone, your technical systems. So we strategically line that out based on your best tax strategy. Not just one company gets all the deductions. You spread them out within 3 companies, and then what's left that is not deductible goes to you. So that's why I only make $42,000 as an employee, because that's all I need to pay for the things that can't be inside of a corporate deduction. Now, second thing, where the process breaks down with not only business owners, I'm going to say with people, is continuity. You're not consistent. You're not disciplined. You don't tie out every month and say, what happened this month? What happened this month? What happened this month? And another huge one that breaks down is if the company's not making enough money, then you commingle by having a different company or yourself pay the bill, versus you have to take from what you have and fund those companies. So once it's decided by the tax strategist that these are the company expenses, you need to have the money there to pay for them. The last thing I would say about where it breaks down is you treat your bookkeeper if you have one. So if you don't have one, that's a breakdown. You treat your tax strategist if there's some passive person on your team. In my experience, the reason I have paid the least amount of taxes and made the most money, and all that extra money that I have saved and not had to overpay in taxes, I went and invested it. The reason I have that pattern is I actively engage with my tax strategist, and I'm usually in talk with them, if not once a month, at least every other week, or every week when a transaction's going. Why? Every dollar you make, every dollar you spend has a tax consequence. So if you're just passively ACHing your money and put everything on an auto pay, you're actually blind to it all. You're not even paying attention. So it's a massive breakdown with most people. So we've just designed an 8-week course. It's called Finance for Non-Finance Business Owners. And I want you to go to the link. It's askbookkeepingcoach.com and go look at that course. So it's going to cost a little bit of money, but it is brilliantly put together. And at the end of it, you'll be like, I should have learned this in 6th, 7th, and 8th grade, and I agree. You should have. In fact, all of this work should be taught in middle school, not by middle school people, by you, the parents. The family needs to be bringing their family into this conversation. So to that point, I want you to subscribe to this channel, click the notification button. I want 5 days a week, this coming into whatever listening device. And it's a family-friendly channel. We did that intentionally so anyone 5 years old and up can start hearing these messages. They may not know what to do with it. They may not understand it, but believe me, I am pouring into their subconscious mind that they can do whatever they want. So when you parents say, I can't afford it, those kids say, you can afford anything you want. You got to learn to make the money, because that's the conversation they need to be having. So while you're here, I want you to also go to the show notes and grab 2 tickets to my Millionaire Intensive. It's how do you be a millionaire in 3 to 5 years? It's all possible for every one of you, but you have to want it. You have to commit and lean in. So last thing I want to talk about when it comes to tax planning processes is, number one, if you're not going to do it with a bookkeeper, set up your own accounting system, whether it's Zoho, whether it's Xero, whether it's QuickBooks, Intuit, whatever you want to use. Intuit has plenty of products inside of there. So get a software where you can track your income, your expenses by company. So individually, and then each of the companies. So in my example of you and 3 companies, you would have 4 sets of books. Now, if your personal becomes very, very light and not that big a deal, you can run it on a spreadsheet and just do some bank reconciliations. But the companies need to have income, expenses, cash flow, your assets, your liability, and your net worth. So you need to know what your owner's equity is as you build this machine to help become a millionaire. Once you've found a tax strategist, if you can find one, most of you will find CPAs who are historians. They're going to want to file your taxes in April, not file your taxes when companies file. Companies file taxes September 15th, which means you as the owner file October 15th. I haven't filed an April 15th return in over 20, maybe even 30 years. It doesn't even occur. So what you want to start doing is looking at the calendar year from a tax perspective, Q1, Q2, Q3, Q4, because by 12/31, that is your ticker. Like at midnight, you're done. Whatever happened that year is what now gets to be reported. And most CPAs are just historians. They're reporting your behavior. They're not in front of you saying, if you did these things, if I led you this way, you could actually strategically create a very different tax process and a tax plan. Now, again, if you have questions, go to askbookkeepingcoach.com or just go to my site, askloral.com, ASKLORAL, ask questions, make a request. We'll be back tomorrow with more content.